Hi, this is PR Sundar. Welcome to Dalal Street Week Ahead program sponsored by Delta.exchange. First, let us see what happened last week. Last week, we can say it is a brutal week, right? Nifty fell continuously in all the 5 trading sessions. As of Friday, the Nifty was down for 8 consecutive trading sessions. And not only that, on Friday, Nifty closed below 23,000. And before this, in the last few months, this is the third time Nifty closing below 23,000. So the bulls were hoping that, 23,000 will not be broken. It was broken. Not only that it has broken, it actually fell another 200 points and to break the swing low. It slightly break the swing low of 775, sorry. Okay, then recovered. So definitely it's no need to say it's all is not well with our markets. Why all is not well with our market? Right? So don't believe all the people, coronavirus, Nifty fell, then shot up 100%. Lehman Brothers collapse, Nifty fell, then shot up 100%. The basic difference this time, okay, in all the previous cases, there was a reason to fall. And Lehman Brothers collapse, coronavirus, right? So, once there is a problem, the markets fall. When that problem is disappearing, the market will start rising. So this time, our market is falling without any reason. The only reason, the people are saying is a overvaluation. And even the people who are saying that markets are falling because of overvaluation, they also 100% agree that even after this fall, still the markets are overvalued. So then how can the market can recover? Right? So coronavirus came, the markets fell, then coronavirus disappeared, market shot up. Higher valuation came, market has fallen, right? Now the market has to come to the attractive valuation. Then, then markets can recover. Where is the attractive valuation? We are still, trading much higher valuation compared to other emerging economies. This FIIs, it's a non-stop nonsense. They just continue to sell. No matter what, happens, no matter what good news comes, whether it is a OMO operation or rate cut or 12 lakh no tax, no matter what happens, they just continue to sell, right? So, if I'm not wrong, it's just my suspicion. I suspect that there is something going on between the government of India and FIIs and behind the curtains. It looks like, FIIs were not happy. So for this kind of selling, any sensible, people, we are not against any particular party, but any people in the power who have some common sense should have called the FIIs to know what is wrong. Why are they selling? And what is it? So, of course, if there is a reason for them to sell, no matter what you do, they are going to continue to sell. But at least you can talk to them. You can listen their perspective. So let us say if they are saying, we are not happy with this, we are not happy with this. So can we rectify that, So can we change that? Is it affordable? You can think of something, right? So on the other hand, the finance minister, in the parliament says, FIIs can come and go, our retail people will save the market. They will be acting as a shock absorber. But then now FIIs are saying, okay, if your retail people can absorb the shock, we will give more shock. So let us see how much shock they can take, right? So that is not the language a finance minister is supposed to use. If I would have been the finance minister, right, I would have said, these FIIs, they have contributed a lot to our country. So it's because of FII investment since 1991, our country has grown so much, right? Now we do not know for one or the other reason they are not happy. So let me have a discussion with them. Let me find out if I can address their concerns if they have. So if I can address if the concerns are such that it can be addressed by India, definitely India will address. But if the concern is beyond the capacity of India, then so we have no other choice, and hoping that our retail people will absorb these kind of shocks, right? So if this is the way, like a positive way of putting it, right? So some FIAs, if they get into the ego problem, they'll just continue to sell. So they just don't care, right? So this is the problem there. So having said all these things, so they are not in our hands. So this is a political game, right? So as I came out with a video 1 or 2 weeks before, so in the last 1 year, the Nifty has given zero return in terms of dollars. So whereas the US markets have given 25% return in terms of dollars. So our premiumness has already come down by 25%. So we do not know how much more we are going to fall, right? But if I'm not wrong, from now onwards, it may not be the price correction, it may be the time correction. However, this mid cap and small cap stocks can continue to correct even more, because on the way up they have done extremely well. So anyway, so these are all like not short-term view, they are long-term view. But this program is all about Dalal Street Week Ahead for the next 1 week only. During the next 1 week, there are no important data. Right? As usual, US markets and European markets are doing extremely well. Monday, US market is closed, so therefore there is no much global cues. But anyway, we don't have to worry about the global cues. If global cues are good, we will fall a little bit. If global cues are bad, we will fall more. So that is a mantra nowadays. So therefore, the global cues are not very important. So every rise is being used as an opportunity to sell by FIAs. So we need to continue to monitor. In the month of January, only one trading session FIAs were net buyers. All the remaining sessions, they were net sellers. In February also, so far, only one trading session, they were buyers. The remaining all trading sessions, they were sellers. And we have only 8 more trading sessions. 5 trading sessions in the coming week, only 3 trading sessions the following week, because there is a one public holiday. So, there is nothing much to discuss. Some Trump speech is there, and then FOMC minutes is there. So there are like some small data. So there's no big data even globally also and locally also. Corporate results, I think today is the 16th February. By 15th February, all the corporate results are also over. So now it's a clearly, the tug of war between FIAs and DIIs, and the tug of war is likely to continue. On the way up, 23,300 is having the highest open interest. Those who follow me, they know very well. The highest open interest is actually at 24,000, but that's because, the buyers, the people who are selling 23,300 call, they buy 24,000 call for the purpose of hedging and reducing the margin money. So therefore, ever since this new SEBI rule has come, you have to ignore the highest open interest. 24,000 is out of question. So the second highest is at 23,300. So that's going to be a good resistance for the coming week, right? And then in case if it crossed, then 23,500 will be next resistance. On the way down, we have already made not double bottom, triple bottom. So, there can be a day where there is some kind of a panic. If that low is broken, it can fall another 200, 300 point. So 22,500 should be the support. So, the range I'm giving is a very, very broad range, 22,500 to 23,300. But what to do? Every day the markets are making 200, 300 points move here and there. The markets are, I would say very, very fragile. So, for the coming week, 23,300 on the higher side, 22,500 on the downside. For monthly position, 22,500 on the downside, 23,500 on the higher side. So that is a range. So option writers, they are hoping that, the time value will be working in favor of them. So let us see what is going to happen the coming week. So most of the writers are hoping that the time value will favor them. I hope you enjoyed watching this video. Thank you for watching.